Good morning, everyone. It is Monday morning, July 1st, 2024. So good to see you all this beautiful, beautiful Monday morning here in Austin, Texas. Excited to go over new listing to pending ratio, leading market indicator, what's going on with the Austin market. How is the market going on? What's going on with rates? Crazy morning so far when you look at the 10-year Treasury and when you look at rates. Really important for us to understand what's going on with the market, especially for buyers, so that we can advise our clients accordingly. Lots to go over this morning, you all. We're also going to do a recap. What happened in the month of June. Now that we have final figures for the month of June, it's going to change just a little bit because a lot of agents will actually close out their listings here in the next week for closings that happened both Thursday and Friday. So the number's going to change a little bit. I'd say a 10% change. Already took that into account. So we're going to go over those numbers. So we've got a crammed morning this morning. Thank you all so much for joining. Let's go ahead and get started. I want to remind you that what we do with the new listing to pending ratio, very important. I've been tracking this figure now for well over 15 years. It's a leading market indicator. All that we do is we take everything that's new in the market, we add everything that came back on the market, and then we compare that with everything that went active under contract and pending. And it's going to give us a ratio. When we divide those numbers, we're going to have this ratio, and that's going to be this column right here on ratio. And what that tells us is in relation to what came on the market, what left the market. A 1.00 ratio is that perfect market equilibrium. So you had 1,000 listings come on the market, 1,000 listings left the market, inventory didn't go up or down. When you see a ratio under 1, that means that less homes were absorbed by the market in relation to what came into the market. That's going to give you a ratio less than 1. That means that inventory is going up. A ratio higher than 1 means that more homes were absorbed by the market. So if 1,000 new homes come on the market, and 1,200 homes leave the market, meaning absorbed either as active under contract or pending, you're going to have a ratio of 1.2. That means that we're taking listings from current inventory. Bottom line, the only thing you have to remember is that less than 1 inventory increases, more than 1 inventory decreases. Now, something really interesting happens whenever you have a changeover in the month. So we're July 1st right now. Guess what happens at the end of the month? Expireds and withdrawns. That's what happens at the end of the month. So it's very common for us to see a drop in inventory, and that ties in with the activity index. The activity index actually improves when you roll into the first of the month because you have less listings on the market, and then it starts creeping back up again. That's not going to affect as much the new listing to pending ratio, so we're going to take a look at this. We've got a lot to go over, you all, but that's a really quick recap on why we track this information. This is going to give us a really good pulse on the market. That's why we've been ahead of the curve compared to other agents, other brokerage companies, especially compared to ABOR. You know how I feel about the ABOR stats. They are lagging indicators. By the time the stats are available, it's what happened 2 months ago. The analogy that I use, it's you're driving down Mopac. You could be going 80 miles an hour and then you hit traffic. The lagging indicator is what you experienced 2 miles down the road, 80 miles an hour. The leading indicator is the wreck that you see up front and you're now stopped going 3-5 miles an hour. The new listing to pending ratio along with the activity index is going to be that leading indicator. What's happening today? What's happening in today's market? Months of inventory, sold price, all of that is lagging indicator. Very important for us to track because it's going to help us price our properties. It's going to help us advise our clients, but it's a lagging indicator. When we get the average sold price for the month of June, that's activity that happened in May, end of April, May, on properties that were listed back in February, on comps that were pulled from October, November, December of last year. Way lagging indicator. So let's go ahead and hit it hard. I've already updated all of the previous weeks so that we can make the best use of time. As you can see, 2 weeks ago, The new listing to pending ratio came in at a 0.68. Anytime you have a ratio between 0.6 and 0.7, this is what we call a tangible increase in inventory. I would even bump that up to a 0.75. Tangible increase in inventory. Week over week over week, we keep on seeing inventory go up. Once you hit a ratio under 0.6, if you've got a ratio of 0.5 to 0.59, I like to use the word substantial increase in inventory. So we finished 2 weeks ago at a 0.68. It's going to creep up a little bit right around the 0.7. Where does that put us? Tangible increase in inventory. And you can see when we go back here historically, look at that, 0.7, 349 plus, 302 plus, 341, 590. You see that 0.68? Look at the difference between a 0.78 and a 0.68. A 0.78 ratio, 341 additional listings were added to the market. When you've got 0.68, that number jumps up to 590. You see how we're kind of creeping into that substantial increase in inventory? That's why I like this ratio. Let's go ahead and get started, you all. We're going to update the number of new listings over the past 7 days. This is going to put us at 1,061 new listings over the past 7 days. This is going to go up a little bit. A lot of listings that expired or withdrew, more so on the expired side. Very common for listing agents to go back and just relist it over the, like even the first day of the month. Hey, let's get a new listing agreement. Let's go ahead and relist it. But we're at 1,061. Where are we going to land by the end of the day? I'd say right around the 1150 mark. You can expect an additional 90 listings, 90 to 100 listings come on the market between now at 10:12 a.m. and 11:59. All of these numbers, except for the pending, lock at 11:59 p.m. tonight. The pending, we will update this for the next 6 weeks. 90% of the updates will happen in the next 10 to 14 days. Let's take a look at price increases. We are looking at 178 price increases. Let's take a look at price decreases. We're looking at 1995. That's going to give us a 92% mark. We had 2 back-to-back weeks at 94%. What is this number? This is simply the ratio between price increases and price decreases. What this doesn't mean is that 92% of the listings went down in price. This is not what that means. That number is right around 53%. This means out of all of the price movement, what went up, what went down? And we can see that 92% out of all the price movement over the past 7 days was a downward pressure. It went down. Back on the market, let's take a look at back on the market. What's going on with this? We are at 203 back on the market, 19%, holding steady at the 19%. When we go all the way back to the beginning of the year, let's go ahead and take a look at this. The average going all the way back is 18%. So slightly under the average, not a big deal. Let's take a look at active under contract. We are at 491 active under contract. This is where you get to guess, you all. You know the drill. I need 5 guesses. How many properties went pending from June 24th all the way through July 1st? I need 5 guesses. Who is going to start us? We need 5 guesses. We've got Sonny Kamisarenko at 215. 1 down, 4 to go. I should have been an auctioneer. Come on, we've got 5 guesses, you all. Okay, we've got Joseph at a very extremely bullish 412. Stacy coming in at 289. We've got 3 down, 2 to go, you all. Go ahead and give me some guesses. The previous week, 433. Before that, 498. We've got Kristen at 300. We've got 4 down, 1 to go. Okay, we've got Gethsemane at 350. You all, let's go ahead and pull this number up and see what's going on. Oh, we. $250 pending properties. That's going to start us off at a 0.59. That means that when we revisit this number this time next week, which by the way, we do not have a Monday morning touch point next week, I will be in the absolutely beautiful city of Edmonton, Canada. But we do not have, now, will we update this information? Yes. Will you get an email? Yes. Will you have all the resources updated? Yes. Will we have a Monday morning touch point? No, you can sleep in. So we're at a 0.59 ratio right now. It's going to land us right around the point. Yeah, we're going to finish, when we revisit this next week, we're going to be very close to the previous week at a 0.68-ish, 0.67. Are we going to cross into the 0.7? I do not think so. I don't think so. I think we're going to see more active listings come on the market, or more new listings come on the market. So we're not going to go into the 0.67. That is not my personal opinion on the matter. I'll say this, 250, slightly disappointing. Sonia came in closest at 215. You would have won the prize. But slightly disappointing. Let's take a look at the comparison right here, you all. Already we have 14 additional listings. That's without the day ending. We are already 14 new listings higher this week than we were exactly a week ago, or a year ago. This is year over year, a year ago. Last week, which is 2 weeks ago, 170 plus. We had a 16.4% year-over-year increase on the number of new listings coming in the market 2 weeks ago. So you can see that going all the way back to the beginning of the year, on average, we are up 16.2%. That's year-over-year, same week. We're up 16.2% on new listings. What about on pending? On average, on pending, we are down 1.3%. But most of that drop is what? Starting March. When you look at March, we're down 5.1%. That's pretty telling. And then over the past 4 weeks, forget this negative 36%. This is going to change. These two are not going to change. Starting in the month of June, we're down 10%. So look at the difference. We're up 3.9% on the number of new listings. We're down 10.4% on the properties that are going pending. We're up 11.2% on the number of new listings. We're down 11.5% on under contract, active under contract plus pending. We're up 16.4% on the number of new listings from June 17th, week of June 17th, year over year. We're down 16.2. That is amazing. And look at the ratio differences. Last year, 0.85. This year, 0.74. Last year, 0.89. This year, 0.72. Last year, 0.94. This year, 0.68. Last year, 0.91. This year, 0.59. So inventory is going up, you all. I made my prediction that we're going to hit 20,000. I made my prediction. I stand by it. We're going to hit 20,000 active listings. And I would say that as things are progressing, I would not be surprised that this time next year, we are not in a buyer's market. And we're going to take a look at the market update resource that we put together. We hit another record high on the months of inventory. We'll take a look at that. Let's go ahead and update the monthly. We're not going to update July. It's only July 1st. Doesn't make any sense for us to update July right now, but we will update the entire thing for the month of June. Keep in mind, you all, this is going to be for the 6-county area. So this is like our little version of the MSA. What does that include? Travis, Williamson, Bastrop, Hayes, Caldwell, and we love adding Burnett County there because we all love Burnett County. So we're going to take a look at the number of new listings. We are at, okay, we got a question. What did you say this time next year? We will be in a buyer or seller's market. What are you predicting? Well, we are currently in a neutral market right now. I'm going to go ahead and break the news for you. We have 5.5 months of inventory right now. Last month, we were at a that actually, for the month of June, we ended June at 5.5 months of inventory. So we have to cross into anything over 5 months of inventory, we are in a neutral market, right? So where do we cross into a buyer's market? What do we have to be to cross into a buyer's market? We have to cross the 7. So from 5 to 6.9, we're in a neutral market. So we have to cross into 7 months of inventory for us to be in a buyer's market. That's what we have to cross. We're going to go over the type of market, show you which zip codes, which cities are in each category. But my prediction, as things are progressing, right, that is without major Fed intervention. Well, I'm even going to say, I think even if the Fed does intervene dramatically, I would say that inventory is going to keep on increasing, keep on creeping up. We now have national data that shows that nationwide, we've got about 30% more listings on the market today than we did last year. Austin was the canary in the coal mine. We experienced our market peak May of 2022. The rest of the country is experiencing a market peak right around this season. And as Austin corrected, so will the rest of the country. Mark my words, it will happen. People can say this time is different, which, by the way, anytime someone says this time is different, you all, I have a recommendation for you. If you like reading, you have to read this book. It's called This Time is Different, 8 Centuries of Economic Folly. It is an absolutely fantastic, amazing, excellent book. Leaders or readers, we have to read. I recommend that everyone read. This is a really, really good book. It goes over 8 centuries of economic cycles. And guess what? Every single time, from the collapse of the Dutch tulip to the, to cotton, to railroad, to whale oil, every single time people said what? Well, this time is different. So this is an excellent book. And right here it says a masterpiece, Martin Wolf by the Financial Times. I agree. I agree completely. Excellent, excellent book. I recommend that every single person here read it. We have to be financially literate. We have to understand what's going on with the market. And we have to be able to advise our clients accordingly. And even if you're never going to have this discussion with your client, which is totally fine, I'd say 50% of what we talk about here, it's, family business, personal business, like it's stuff that we're sharing so we can understand. We're not going to have 90% of these discussions with clients. Some of them we're going to have this discussion, but we have to understand what's going on. So let's go ahead and start updating the new listings for the entire month of June. This comes in. Oh, interesting. Very interesting. 4540. 4,540. That's going to give us less new listings than June of 2023. Take a look at that. But we had a killer May 5,441. May of last year, 4,616. So really interesting. Let's take a look at the number of price increases. We are at 659. This is going to be the lowest one since December. When you look at price increases for June of last year, 870. June of this year, 659. What about price decreases? We are looking at 7547, 92%. When was the last time we saw 92%? So we have to go all the way back to September of 2022 to have a number higher than 92%. That's at 95%. So we just broke a 20-month trend on the ratio between price increase and price decrease. What else is this? That's a leading indicator right there. 92%, we just broke a 20-month trend. More properties are now experiencing price drops. And take a look at this number, 56%. Well, what the heck does this mean? This is the relation between price drops and active listings. What's the historical average? 40 to 42%. If you go all the way back to January 2023, the average is 50%. But if you go all the way back in time, if you go all the way back to September of 2020, September 2020, we're at 41%. So we're at 56% right now. We've got a question right here. How long do you have to stay at the 7-month mark to establish a buyer's market? Any 1 month. So if you're only at a 7-month mark for 1 month, then that 1 month you're in a buyer's market. And then you can go back to a neutral market. If you go 7 months of inventory for July of 2025, and then August, you're at 6.9, then we were there for 1 month, we were in a buyer's market. Does that make sense? Now, you bring up a very good question, Bertina, which is real estate is hyperlocal. So what happens when the entire market gets into a buyer's market? You have to then look at all of the submarkets, all of the 75 zip codes. What you will notice then is that out of the 75 zip codes, when the entire market is in a buyer's market, that means that over 50% of the 75 zip codes are in a buyer's market. Some of them have been there for 2 years, will stay there for 3 years. Others will just reach that. So it's the average of everything. That's what it is. Other markets are going to be in a seller's market forever. They will never go into a neutral market. They will never go into a buyer's market. But the percentage of zip codes that will be in a seller's market and in a neutral market will be cumulatively less than the number of zip codes that are in a buyer's market. Does that make sense? Very good question. Okay, let's take a look at back on the market right here, you all. We are currently, let's take a look at the number. It is 846,846. That's going to give us 19%. That is, okay, the highest since January. Let's take a look at active under contract, 1982. And this number is not going to change, 1982. This is interesting. 1982, June of 2023. Look at that, 2209. Now, this number is going to change pending. Agents are horrible about updating pending, so this number is going to change. But right now, ooh, oh, wow, 1549. We're at a 0.66. We closed out the month of June at a 0.66 ratio. Agents will update the number of pending properties. I expect this number to go up to about the 1,700 mark or so. Let me go ahead and be bullish, 1,750. We're going to be at about a 0.69. So I would say we're going to beat the month of May when you look at the new listing to pending ratio. Not because we're going to have more pendings. Clearly, we're not going to have more pendings. Last month we had 4215. I expect that we settle around the 3750, maybe even 3800. I'm really being bullish here. But the reason why is because we had about 900 less new listings come on the market in June as opposed to May. Whereas last year we had more listings come on the market June as opposed to May. Why is that? What's going on? This is what I think happened. We had a very early selling cycle. And I would say that a lot of sellers decided to list their homes both April and May, right? We noticed prices going up, what? February, March. So because prices started going up, guess what people said? List it now. Prices are going up. Take advantage of the market. So we noticed a huge increase in the number of new listings come on the market April, May. So that borrowed from the number of new listings that would have come on the market in June. It was very early season this year, earliest on record, as a matter of fact. Now, this is still a very large number, especially when you look at the relation between new listings and pending listings. So we're going to go back and do the actual real number right here, 1549. So we've got a question. Am I correct in believing that an overall buyer's market will still put price pressure on homes in sellers' market neighborhoods? Well, yes, absolutely. No doubt about that. They will not go up as much, right? So even though it's a seller's market, that doesn't mean that properties are going to sell for 105% list price, what's going to happen is that the neighborhoods or the subdivisions or the zip codes or the areas or the schools that are in a buyer's market, the sold to list price ratio will be anywhere from 93 to 95%, whereas the properties in a seller's market will be anywhere from 97 to 98.5% sold to list price ratio. So it's going to put pressure on it. But keep in mind that even when you look at the absolute pit of the market during the great financial crisis, the big GFC, we still had, 8 or so percent, 9% of properties sell over list price. And there were still some areas that were recession proof. At the time, we had Villages of Western Oaks. That was recession proof. We had Jack's Pond. I love Jack's Pond, one of my favorite subdivisions in the entire Austin area because of the tax rate. So very close proximity to major employers, easy access to I-35, to MOPAC, to 183. It's outside of the city of Austin with an Austin address. It's got a beautiful, beautiful lake there called Jack's Pond. I love that neighborhood. One of my favorite neighborhoods in the area. Very affordable. Very affordable. That was a recession-proof neighborhood. Every time that I had a buyer that said, hey, I'm really concerned about the market. I'm like, here, take a look at this neighborhood. Let's go see 2-3 homes in this neighborhood. I'm like, this is a recession-proof neighborhood. This is fantastic. Great schools, great commute, great area, low taxes. Every single person. I sold so many houses in the neighborhood. It was crazy. And every single person would call me back 3, 4, 5 years later. And they're like, oh my gosh, I'm so glad I bought here. So there's always going to be a recession-proof neighborhood. But that's a very good question. It will still apply pressure, but they're going to fare a lot better. Burnet always appears to be the worst city whenever I look at the stats, and now I may have a listing coming up there. Could you share your thoughts on a city like Burnet, where at one point it maxed out at 11 months of inventory? It's got to be the best. It's got to stand out. That's what it has to be. So it's got to be priced right. You've got to look at a competitive analysis more so than a comparative analysis. And it's got to be perfect, right? There are 5 factors that affect the saleability of a property: location, price, condition, competition, and what? What's the 5th one? Location, price, condition, competition, and what's the last one? Remember? The market, right? That mysterious cloud called the market. Well, you can't control the market. You can't control the location. You can't control the competition. So what are the 2 left? Condition and price. If your client can't make it, and those 2 go hand in hand, because you have the best condition doesn't mean you're going to have the best price, right? So you could very well be in a position where it's the best condition and you have to be aggressive on the price. Because of what? The market, the competition. So you're going to have to do a very detailed analysis on that specific property. What are buyers purchasing? And it's got to be the best of the best. You've got to tour properties that are currently active under contract. You've got to look on the MLS on the properties that are currently pending. Are there buyers buying in Burnet? Absolutely. There will always be a buyer buying in Burnet. The challenge comes when you look at the condition, when you look at the location, when you look at everything, and then you've got a client that says, well, but 2 years ago, it didn't matter what happened 2 years ago. That's irrelevant. Does that answer your question? Okay, let's take a look at closed. What closed last month? We're at 2793, 2793. Let's take a look at how many properties withdrew. We are at, 770. 770. Okay, so we've already beaten June of 2023. That was 759. 770 properties withdrew, you all. That is just crazy. What about expired? How many properties expired? We're at 466. Y'all, to put this in perspective, so far this year, 5,601 properties. 5,601 properties have expired or withdrawn so far this year. That is just staggering. So imagine just even adding those to the existing active inventory. We'd be at 18,000. That is just amazing. Let me go ahead and just move this out of the way really quick so that I can print everything as a PDF and we can review some amazing graphs and charts. So we can see what's going on with the number of active properties pending, look at some historical trends, and then from there, we're going to take a look at the bond market. Really interesting day what's happening with the bond market. And then we're going to look at some additional stats. It is 10:35 right now. We're going to end at exactly 11 a.m. because we want to make the best use of time. We don't make money having these meetings. We make money servicing clients. So we want to make the absolute best use of time. Give me 1 second so I can go ahead and just print this out and we can make this available. This will be available as a PDF, both on your own personal subdomain. And as you know, I'm going to email you a link to all this information so that you've got access to this so that you can take it to listing presentations, to buyer presentations, review it. That's why we do this, you all. We don't want to be greedy with our data. We want to be very generous with our data for our clients. Take a look at that ratio. So we've been on a downtrend since 2023. Let's keep on going. Look at some charts. Weekly new listing to pending ratio. There we are right now. We are very close to that 2022 mark. So we had one market increase right there, back down, another market increase back down. But you see how this peak is higher than this peak? So overall, the market is trending down. Take a look at the weekly new listing to pending ratio. You can see the same thing, right? Overall, we've got a downtrend to the market. Let's keep on going. Here's the monthly information. Let's compare monthly information. Month over month, we've had 305 active listings, 305 more active listings, right? This is June versus May. Active listings, 901 less new, which is really amazing, but 12.4% less pending. Let's take a look at year over year. 2,397 more active listings, 161 less new listings. We had more new listings come on the market June of 2023 versus June of 2024. That right there broke the trend going all the way back to November. I am happy to see this, but take a look at the past 2 months. April and May, 2260 active, 1196 new. So that's just amazing. That 1196, that 825. So nowhere close to make up what's been going on since November, but I'm really happy to see this negative number right there on the new side of things. Let's go all the way back to pending. So for May, we're down 5.5% on the number of pending transactions. So far for the month of June, negative 17.7. We're negative 762. That number is going to improve. Where is it going to settle? Around the 300 to 400 negative. That's where it's going to settle. And here's the difference between the new and the pending. We've got 1855. And take a look at the difference between new and pending for the month of June. We are 87.7% above average on the difference between new and pending. Really just amazing. But nowhere close to 2022 at 3,051. And as you can see right there, that's also going to be the difference between new and pending. This is going to be the monthly comparison. We've got the darker color 2023, the lighter color 2024. So we did break this massive increase. Thankfully, we're at the 1855. That's going to improve. But last year, we're at 1277. And then, of course, you can see the new listing to pending ratio. Last year, 0.77. So far this month, 0.66. This is going to improve. It's going to be to the month of May. It's going to be better than a 0.67. Let's go take a look at a few other ones. Take a look at this one. This is the price drop divided by the active properties. Right now it's at 56%. The historical average is 41%. Monthly new listing to pending ratio, we're at a 0.66 right now. Last year, 0.77. 2 years ago, 0.58. That's when the market changed. That's when everything changed. That was 2 years ago. That was June of 2 years ago. So I'm really, really glad that we are better off than we were 2 years ago. Monthly new listing to pending ratio. We just went over this data. Let's go ahead and just keep on going. Active listings, 13,473 active listings, 6-county area. Active per 100,000 population, 535. A little bit more than last month, quite a bit more than last year at 452. And you can see that we are approaching the historical average for the number of active listings per 100,000 people, we are only down 2.5%. What about new listings? Where are we with new listings? As you can see, we're down 16.6%. But take a look at the number of new listings for the month of June. We are 10.9% above average. And when we look at the cumulative number of new listings, meaning we add everything from January all the way to the end of June, we are 23.9% above average. And you can see that we just beat every year on record going all the way back to the year 2000. I don't care. We can go back to 1900. And of course, this is going to be the single highest number. So far this year, we've had 27,577 cumulative new listings come on the market. That's really amazing. Back on the market, 19%, highest number since 2020. Total pending properties. This is really important. This is going to be that leading market indicator. If something doesn't go pending, does it close? Nope, not last time I checked. It doesn't close. So 3,531 closed properties. This is going to go up a little bit. It'll settle around the 37 to 3,800 mark, but we are down 16.2% on the number of pending properties month over month. Year over year, we're down 17.7%. So let's take a look at the pending properties for the month of June. We're 10.6% below average, historical average, going all the way back to the year 2000. This one is going to be cumulative. All pending properties from January to June. Thankfully, we are 9.4% above average, but we did go down 1.2% year over year. Last year, from January to June, 24,169 pending. This year, 884. Will agents update the pending to where it's going to bridge this gap? It's going to get very, very close. Now we have to adjust this on population. You ready for this? Pending per 100,000 people, 140.3 for the month of June. Let's take a look at cumulative. 954.2 pending properties from January to June adjusted for population growth. 20.2% below average. There's only one, or two for that matter. There are only 2 years where the number of pending properties adjusted for population are lower than so far this year. That's going to be the year 2009 and the year 2003. Only 2 years. We're at 954.2 pending properties per 100,000 people. When you look at the active minus the pending for the month of June, we're 10.9% above average. So you take everything that's active, everything that's pending, 9,942. That is going to be the second highest June on record. We have to go all the way back to 2010 to get 11,290. Let's take a look at just a few more things and then we're good. Expired plus withdrawn. There's that 1,236. And then when you look at the cumulative expired plus withdrawn, we're up 11.2% compared to last year. Let's look at closed and then we are going to look at a few more resources. Total sold for the month of June, 2,793. We can see that we hit a record high in 2021 for sold properties for the month of June. Cumulative. We are flat. As a matter of fact, we were slightly higher than we were last year. From January all the way to June, so far this year, 15,872. Last year, 15,847. So we're 0.2% higher this year than we were last year. The concern that I have is that we're just not seeing the number of pending properties to justify a dramatically better 2024. At best, when you look at sold properties, it's going to be flat. When we revisit this number January 2025 and we do the entire recap for 2024, I expect 2024 to be single-digit drop compared to 2023 on the sold side of things, especially when you look at the new listing to pending ratio, activity index, number of pending properties. I do expect that to be down a little bit. What about adjusted for population? 633, we're actually down 2.4% adjusted for population. So when you look at the entire year's ratio, so far for the entire year, we're at a 0.75 ratio. That's where we are for the entire year so far this year. And where does that put us? That tangible increase in inventory. That's where that puts us. So let's take a look at market update. As you can see, we're at 5.4 months of inventory. We're closing out June at 5.4. It could go down a little bit because agents are really bad about updating their sold information. As a matter of fact, I do expect us to retreat back into the 5.4, but as of this morning, we're at a 5.5, and you can see that we're into a neutral market. And when you look at the number of active residential listings, 15,753. And from there, oh no, wrong one. Let me go ahead and here we go. We are at 15,201 as of this morning, this very morning, 15,201. The only reason it went down, you see Monday up, Monday down a little bit, Monday up, Monday up, Monday up, Monday up. Monday is highlighted yellow or highlit yellow, if you want to use that word that we've coined. The reason we're down 71 is because of withdrawn and expireds. That's why we're negative today, because of withdrawn and expireds. We're down 66 week over week because of withdrawn and expireds. We are up 614 month over month. We've got 4.21% more active listings today than we had a month ago, and we are up 30.6% year over year. Number of pending properties, 4,705, of course. Pendings become solds. That's why the number goes down when the month changes over, because they go sold. You can see right here, we were at 5,000 towards the 29, 30, 31st, and we dropped down to 4,828. And then we kind of go up a little bit. So we're at 4,705 right now. That's going to give us an activity index of 23.6%. Bonus question. What's the formula for activity index? Bonus question. What is a formula for activity index?
Pending divided by pending.
You got it. That's exactly it. Pending divided by active plus pending. That is exactly it. That is a leading market indicator. I love the activity index. 25% activity index is going to give us right around that 4 to 4.5 months of inventory. This shows you out of everything that could be absorbed by the market, what's the percentage of properties that are absorbed by the market? That's exactly it. Charmaine, go for it.
Sorry, Dan, I hit it by accident.
Oh, that's all right. Well, it's good to hear your voice anyway. And what is going on with special listing condition? But before we get to that, you all, I want to show you this right here. This is so important. Out of all the active listings on the market, 15,201, 27.2% are new construction, 72.8% are resale. Now look at the activity index, y'all. I cannot stress this enough. Look at the activity index. New construction, 31.8, very healthy. But look at resale, 20.06. What is the 20.06? That's kind of a danger zone right there, right? Anything under 20%, you start getting into that 6.5 months of inventory range. So even though we've got, a slightly weaker overall activity index at 23.64, I'd much rather see that at 25%. That right there includes new construction. But when you separate these two numbers, you can see that new construction is doing quite well at 31.81. Resale, very close to that, under 20%. There are 24 short sale properties currently on the market. That is a record high for our market. There are 10 short sale properties that are currently pending. We've got 12 pre-foreclosure, 4 in foreclosure. We've got 6 auction, 2 notice of default. That's like totally irrelevant because no one updates that. We've got 146 real estate owned, REO. We've got 4 HUD owned, and we've got 322 estate. I'm seeing just so many estate sales. It's just incredible. and 32 on the probate side of things. You can see the activity index at 23.6 along with the months of inventory. As the activity index goes down, months of inventory goes up. Leading indicator, lagging indicator. What is HUD? Department of Housing and Urban Development. That's what, Department of Housing and Urban Development. So through GSEs, government-sponsored enterprises, they issue and underwrite and back government loans, right? FHA and all of that. So whenever that goes under foreclosure, then HUD will auction off the property or resell the property in the open market. So very good question. You can go to HUD Home Store and you can sign up, create an account, and bid on those properties for clients. Active listings, 30.6% increase. This is last year. This is this year. Pending properties. This is last year and this is this year. We are down 8% on pending properties. Today we have 4,705 pending properties. Last year, 5,113. And that means that the activity index is obviously going to be lower than last year. Now, this is really important because last year we were at about a 22.7% activity index, and this is into the first week of November. Y'all, we're very close to that right now. So look where we were activity index last year. We were at 31.2%. We're at 23.6% right now. So this is a leading indicator. And months of inventory, we're at a 5.4. This time last year, we were at a 4.06. And you can see that we hit a record high number of active listings on Monday, June 24th at 15,267. We're at 15,201 right now. So what does that do with the market? Well, let's take a look at the activity index for cities. Austin is officially under 20% on the activity index, pending divided by active plus pending. We hit 5 months of inventory on Friday. The only reason why we went down on inventory is because properties expired and withdrew. As those come back on the market, we're going to hit back that 5 months of inventory. When you look at the activity index for zip codes, you've got quite a few zip codes right now that are really close to that. I mean, definitely under 20% activity index. 78701 at 4.4, 9 properties under contract. But look at the number of properties that the activity index is just super, super low. Let's take a look at this. Look at that. So here's the average. The yellow is the average. The green is the median. Look how many properties are really, really close to that under 20%. 3805, Georgetown, 626, Driftwood, Bastrop, 78731, our zip code, 5351, 5437. All of these, I would actually get rid of 37, stop at 54. All of these are approaching that under 20% activity index. So let's take a look at the type of market. This is going to be the type of market zip code. This ties in with the previous question that we received, which, okay, well, if you are, is that going to put pressure in other zip codes? And, well, how long does something stay in the buyer's market? We still have 57% of the 75 zip codes still in a seller's market. Then we've got 24% in a neutral market and 19% in a buyer's market. I mean, that's just really amazing. 14 out of the 75 zip codes are now in a buyer's market, with 78701 leading the pack with the highest months of inventory in the entire area out of 75 zip codes. Highest inventory right there. And let's take a look at this really cool chart right there. You can see how many zip codes are just inches away from a buyer's market. You've got 78733. 3.5. I mean, Burnett's already now in a buyer's market at 7.06 months of inventory. 4.6 is now in a buyer's market. But we've got 4 zip codes that are just inches away. We've got 3.3, 3.5, Marble Falls, and Smithville. inches away from a buyer's market. And then you've got a few zip codes that are really close to a neutral market. Dripping Springs, Liberty Hill, Georgetown, and then 5.3 Austin. I'm going to go ahead and throw in 5.5 Austin. Very, very close to a neutral market. Let's take a look at type of market for cities. And we've got 20 out of the 30 cities that we track are in a seller's market. And this is a really interesting development where we have more cities that are in a buyer's market than a neutral market. We've got 6 cities in a buyer's market: Burnett, Cedar Creek, Dale. Well, we've got a chart right here. Let's go take a look at it. So we've got Spicewood, 11 months, Wimberley, 8.17, Cedar Creek, 8, Dale, 7.6, Lago Vista, 7.41, Burnett, 7.06. And then we've got 1, 2, 3, 4 in a neutral market. But look what's happening. Austin, mark my words, 10 days. Give me 10 days. It's going to be in a neutral market. Liberty Hill, give me 15 days, neutral market. Dripping Springs, 15 days, neutral market. Georgetown, give me 25 to 30 days, neutral market. Bastrop Lakeway, give me another 25 to 30 days, neutral market. See how you've got a lot of cities that are really close to that transition into a neutral market. So what's happening with pricing? Well, both the, let's take a look at it here. Both the month over month and the year over year average sold price went into the negative side. So we finished June of 2024 at $590,214. It's going to change a little bit as agents add their closed deals. I told you that. I hate to say that, but I told you that. Right? When this number was up 12,000, what did we say? It's going to go negative. Indeed, it has gone negative. So we're down 0.6% month over month. We're down 2.8% year over year. On the median side, we're still positive. We also said that we were going to stay positive. We are positive. It's going to stay positive. I don't foresee this going negative. I do foresee it going negative. Oh, actually, will it go negative next month? Yes. I would say yes. I'd say yes, it's going to go negative next month, both on the average and on the median. So what does that mean? Let's just pick 2 charts, make the best use of time. You know me, I love this one. When you track the median sold price versus 24 months prior, we're down 14.4%. When you track the median sold price compared to 36 months prior, we're down 4.19%. So we just crossed the March 2021 versus March 2011, March 2011 versus March 2008. That was down 2.93. We crossed that one. We're fairly close to the November 2004 versus November 2001. So we're very, very close to that. Let's go ahead and take a look at the bond market, you all. I want to make sure everyone is sitting down because let's refresh this bad boy. Look at the bond market today. We are up 8.2. It was 8.6. We're up 8. Keep on going down, baby. We're up 8 basis points on the bond market. We are very, very close to another repricing line. We did cross a repricing line on Friday. We spoke about this on Friday. Be sure to join our Friday live meetings. If you can't join, watch the recording. We spoke about this. Robert did an amazing job going over mortgage-backed securities and what's happening with rates. We've already had one lender reprice, Flagstar repriced for the worst. So what is causing this? Because when you look at the data that was released this morning, it was all positive for the bond market. We've got global manufacturing PMI came in less than expected. We've got construction spending came in way less than expected. And if people spend less money, what happens with prices? Goes down, right? So it's really kind of at the best disinflation, but could very well be deflation. Just like it's happening in real estate. Real estate is experiencing deflation, not disinflation. It's not that the rate of increase is slowing. That happened 2 years ago. It's actually going down in price. Employment down, PMI down, and this one was a huge one. ISM, Institute of Supply Chain Management, manufacturing prices actually down. When you look at this data, everything points to the bond market actually improving because it means that, okay, we've got prices going down. So hopefully the Fed looks at this and says, okay, well, we've got price control, check. But the opposite happened. It actually is just skyrocketing up. So what's causing this? Well, the Japanese yen is pretty much collapsing. If there's ever been a time since 1986 to make a trip to Japan, it is right now. It is at 161.54. It is absolutely collapsing. I mean, the last time we had the Japanese yen in relation to the dollar at this amount, you all, I was 9 years old. So you've got a lot of purchasing power with the US dollar against the Japanese yen. And that is freaking out the world. But a part of what's happening is that the Japanese central bank, they need their local currency. So they're selling US assets, the 10-year treasury being a big part of it, in order to get cash. But the Japanese yen is just collapsing right now, something that we have not seen in 40 years. Really amazing what's happening. As a matter of fact, let me show you a few different currencies and what's happening with the currency market because the economy is global. So let's see what's going on here. I'm going to go to markets. I'm going to go to currencies, and we have a few currencies. Well, let me go the other way. No, let me start with this one. Okay, so we've got the Turkish lira. That's been a horribly performing currency in relation to the US dollar. So the Turkish lira is up 26.08%. Great time to go to Turkey, by the way, right now. We've got the Chilean peso. So there we go. We've got the US dollar in relation to the Chilean peso. So that's up 18.4%. Great time to go to Chile, by the way. We've got the Brazilian real, and that's up 16.3 or 23%. Great time to go to Brazil. Big purchasing power right there. And then here we've got the Japanese yen. So we've got 11.6%, but the majority of that happened very recently. No one thought it was going to cross into the 161, and here we are, 161, just crazy. Now, John D., go for it.
Is there anything doing better than the US dollar as far as other global currencies go?
John D., that is such a good question. So I'm going to ask you, John D., what currency is outperforming the US dollar? Number one currency outperforming the US dollar. You've got one chance at this, John D.
I mean, Bitcoin, but I'm thinking about actual
No, not Bitcoin. We're talking about real currency, not the real currency, real.
I don't know. Another country, I'm not sure of what's doing better.
Come on, one guess.
No.
I can guess.
Go for it.
Is it Mexican currency? You always talk about Mexico doing well.
Oh, no. Mexico's right here. Here's Mexico. You know, that's actually gone down. Great time to go to Mexico, by the way.
Currency?
Well, let's put it this way. Can I give you a hint, John D?
Yes.
It's a currency that we tried to collapse. Joseph has it right. The Russian ruble. The Russian ruble is outperforming the US dollar out of all of the currencies in the entire world. The Russian ruble is outperforming the US dollar. Yeah, that kind of worked, didn't it? And we've got the Pakistani rupee that's outperforming at 2.69%. This is South Africa. So what is it? The South African rand. Am I correct? There's someone Google that for me. We've got the South African rand. We've got the Swiss. We've got the euro. That's outperforming the dollar. We've got the New Zealand folks out there. But the number one currency is the Russian ruble at negative 3.34. And by the way, negative means that negative for us. And then you've got the Pakistani or Pakistan rupee. So there you have it, Joseph. You get the win, man. You nailed it. So there you have it, you all. But when you look at the actual Japanese yen, I mean, that's what, fourth on the list. Turkish lira, great time to go to Turkey right now, you all. Great time. Charmaine, you were in Turkey not too long ago, which, by the way, thank you so much for the bookmark. Talitha uses that every single day. She loves that bookmark. It's her favorite bookmark.
You're welcome.
It was a good time to go to Turkey, right? Your dollar like went far, didn't it?
Yeah, I really, it did.
Yeah.
It was a good trip.
There you go. Y'all should do a team price trip to Turkey. How does that sound? That would be fantastic. So that's what's going on with the bond market right now. You've got international pressure that's affecting the bond market. If the Central Bank of Japan needs assets, if they need their local currency, if they need liquidity, if they need cash, they're going to get rid of an asset. And what's the asset? The 10-year treasury. You have more 10-year treasuries hitting the market, enough that it's going to counter all the other news that would have, in a normal market, normal day, would have actually been a positive to rates. Unfortunately, because of other pressures, it's actually a negative. That's what's going on right now. Lock and float. That's all I can say. Imagine if you had a client that locked in right here, June 25th. So we are at, let me take a look. I know that Robert sent me a rate sheet because Robert is absolutely amazing. Just absolutely love Robert. Melanie, don't forget to tell him that. And let's take a look at Robert's rate sheet right here. And let's take a look at what's happening. Of course, he sent me a rate sheet. He's like, duh. And let's see what's happening. I'm waiting for this to load. And there we have it, you all. Yeah, conventional 30-year went up. We're at 6.875 right now. We have another one that just repriced for the worst. We have the Lone Star just repriced for the worst, even though we haven't crossed our repricing line. They already went ahead and repriced it because we're not seeing it backtrack. This is a lot to make up right there. And not only that, but the news cycle is over. I mean, we've got at 11 a.m. Atlanta Fed GDP now. No one really cares about this. So we've got all the news for the day. So what's going to happen this week that will affect us? We've got JOLT, job opening, labor turnover. I hate this report. It's just dumb. It doesn't make any sense because everyone lies about available jobs. Companies post 10 available jobs when they only want to fill one position. This is a garbage report. We've got the investor business daily tip economic optimism. They're expecting to go up. We've got, so really all about payroll this week. We've got additional manufacturing pricing. That's all going to come out on what? On Wednesday. Markets are closed on Thursday, but the Fed balance sheet is going to be published because I already know those numbers. And then Friday, it's all about payroll. What's happening with unemployment, broad unemployment, U6 unemployment. So this week is really all about payroll, all about jobs. That's what's going on this week. Well, y'all, I promised you that this meeting was going to be exactly 1 hour. Please forgive me. We are at 1 hour and 7 minutes. Biggest takeaway for today's meeting. Number one, added pressure on the new listing to pending ratio. We are noticing that ratio stuck at that, so far this year, 0.75. Weekly around the 0.68, 0.69, 0.7. Monthly, same thing. That's going to increase inventory. Competition is increasing. Well, what's the good news in that? Builder commissions, y'all. It's all about builder commissions, right? Just buyers are buying. You're going to see more deals. You're going to see some amazing opportunities. It's going to keep on providing some additional incentives for buyers. When we look at the affordability graphs that we show, the PITI 3 years in a row is actually dropping. So we are increasing affordability. That's all good news. What's the risk on the listing side of things? You've got to have these discussions with your clients. Got to show them the data. We've got a lot of inventory that our clients are competing against. So very important for you to show them this data. So that right there is going to be your top two takeaways. Outside of that, rates. We are back. And once again, I hate to say I told you so, but I told you so. I am never a fan. I don't get overly excited. I do not get overly excited whenever we start seeing some improvements. Down, up, down, up, down, up. Let me make it to where the pen doesn't disappear, right? So we hit this really high number right there. This is when, we hit this really, really high number. That's when rates hit 8%. And then we went all the way down and everyone's like, you see, I told you so. Things are amazing. And then we just kind of went up, right? So now we're down and then we're kind of up right here. Thankfully, we are really nowhere close to where we were. But this right here puts rates at what? Well, let's take a look at the date. Let me go ahead and just delete this right here. And this is April 25th. Let's go ahead and take a look at Robert's rate sheet for April 25th. I'm going to go to the drive, the team price drive. I'm going to go to working with buyers. I'm going to go to weekly rate update. We save everything and we're going to go around the April 25th mark. So here's April 12th, April 24th. We also have one, 7%. So we were at 7% when we hit this 6.699. We're far away from that. We're far away from that. So last time it took us what? So from April to end of, well, actually it didn't take us that long. It took us about 2 weeks to get there. So I hope that's not the case right here. So we're at what are we at again today? Today we are, this morning, we were at 6.875. Oh, are we going to hit 7%, you all? That's the big question right there, because unfortunately we know what happens with the market when we hit 7%. It just kind of stalls. All right, so we're having a little bit of an improvement right there. We're down 7.5 basis points. I just hope this momentum keeps going. So what does that mean economic news wise? Well, I hate to say it, but that kind of means that we need some bad news here. We need the unemployment figures to go up. We need the unemployment rate to go up from 4% to a 4.1, 4.2%. We need payrolls to be down. We want payrolls to be at the 175 mark. We want private payrolls to be down. We want that to be at the 150 mark. If this week we have less than desirable employment figures, the bond market's going to rally. Now, I say that putting into context that today was supposed to be a great day and news from overseas kind of killed that. So, we've got Fed Chair Powell speaks tomorrow at 0830. So who the heck knows how that's going to go. So very interesting week. It's an interesting start of the week. And I also want to remind you all that this could correct itself very, very quickly. We will keep you updated, posted on a day-by-day basis so that you know exactly what's going on with the market. That's all I have, you all. It's 11:12. Thank you so much for joining. Super appreciate it. I want to remind you that you're going to get a daily recap later on today with all of the information that we went over. You're going to get that daily recap. So if there are no questions, comments, concerns, criticisms, or complaints, then please join us tomorrow for our live in-person mentorship meeting at 10 a.m. We are going to have our team training Wednesday where we're going to go over the contract proficiency challenge. We are having a Friday meeting, July 5th, by the way. So we are having a Friday meeting. So be sure to join us live Friday meeting. And the reason why we're having a Friday meeting after July 4th is because all of next week, I will be in the amazing, beautiful city of Edmonton. I heard it's not beautiful, but it is amazing. So I will be in Edmonton all of next week. And then we're also not having a Friday meeting the week after that because I'm going to be in the beautiful city of Ogden, Utah. But you will get all the updated information, and I cannot wait to come back from these trips. Have an absolutely amazing day, you all. Thank you all so very much for joining. Super appreciate it. Thank you for the encouraging messages. And that's all I have, you all. See you later. Have an absolutely amazing, incredible, fantastic day. And I want you to hold the line.